Alright, so check this out. Several weeks ago, I was invited back to the Call Toni radio station on K-Talk 1150. And it was actually my third time there. And what's so cool about the Call Toni radio station is they've had some couple of super duper celebrity real estate folks on there. Folks like Ken and Earl with HDTV selling LA. You had Josh Flagg with the $1 million listing. And you even had Valerie Fitzgerald with selling LA as well. So me and my good friend Matt Theriault with Epic Professional went on there for the third time, and some of the interesting conversation had to do with some of the changes in the marketplace. So take a look.
We accidentally found a particular buyer that's more aggressive than your traditional buyers that Matt just talked about.
Yeah.
And that particular buyer had to do with just Wall Street, or what I like to call hedge fund buyers.
Yes.
And these people literally do not care on the type of returns. They only care yields of like 8 to 9% yield in a year.
Yeah.
And they are buying properties left and right. So one of the strategies that we do in our business, which is a small part, is called wholesaling, and which is to get properties under contract and resell them quickly, instantaneously, and try to make a quick buck, as they call it.
Right.
So all the flipping shows are basically predominantly their strategies on wholesale.
Right.
So what we found out is say, okay, if these cash buyers here that are buying, fixing, and flipping, like my friends, if they're not willing to buy the property because there's not enough margin, how was I supposed to make money?
Sure.
Right? So, but I accidentally found those particular buyers and I ended up flipping them. They were willing to buy it for 10, 15, 20, even $30,000, $40,000 more than what I would ever buy it for. Because this has never happened in U.S. history ever, where actual big corporation comes in and buys up blocks of houses, right?
Now take a look on what my good friend Matt had to say about the changes happening in the marketplace.
The other thing right now that's going on in the market is, we talked about the lack of deals that are out there.
Yes.
You got to be really careful because the market is being very much investor driven.
Yes.
Yep.
And when a bunch of investors flock to anything, it creates a bubble.
Sure.
Yep.
And really the what's going to support real comeback and real appreciation is when obviously the unemployment improves.
Yeah.
And when the banks start loosening their guidelines and making that money available to, Mary and Joe homebuyer, that's really where the real market is going to come back. So be really cautious and don't be in too much of a frenzy to go out and compete and overbid and try and out-compete these people that have endless amounts of money.
Sure.
Jeff mentioned it's very accurate that they don't really care about the returns right now.
Right.
And that can be very dangerous for private investors like ourselves.
Yeah.
But the other thing that Jeff said that I would like to shed a little bit of optimism on this is that even though these big hedge funds have infiltrated the markets and their presence is known, they're still only 3 to 4% of all real estate transactions. The private investor still does more deals than these hedge funds.
Okay.
So there is plenty of opportunity.
That's
Okay,
awesome.
you just got to be cautious and careful about how you do it. And just because they bought a deal doesn't mean you have to.
Right.
Alright, so we're coming to an end, and for next week, for Flipanese TV, we're going to show you the after the beautified, sexified house. And take a look on some of the sneak peek of this project, Project Montana. But what we're doing is adding 498 square feet in foundation, which But how do you actually score social equity and say, okay, what is a good score? Well,